This is a uh, trading recap for today, January 3rd. Also, it's a kind of a description of a strategy that I traded today that I developed, and I'll go into that. So let me go into that right away. It's a strategy that's based on 30-minute 8 EMA resistance line. It's shorts only, and the thesis of the strategy is that just using my powers of observation, I've really come to the awareness that price tends to be extraordinarily reactive to the 30-minute EMA, 8 EMA. More so than most of all the other EMAs that I've observed price reacting to. Since that's the case, I decided to form a strategy to trade it exclusively. And the strategy combines the following elements. Key elements of the strategy are that it's shorts only, that it's against the 30-minute 8 EMA only, and RSI, this is really important, RSI has to be under 45. Those are the three elements of the, I think that's pretty simple. There's only really three ideas to this strategy, and those are that. So first one to go into a little bit more, shorts only. There's a saying in trading, longs take the stairs up and shorts take the elevator down. So if trading is a game of probabilities, and in order to win often enough to make this profitable, then I have to stack the odds in my favor when I trade. One easy way to gain a slightly better edge is to only trade the direction that moves me away from my entry and towards my target as fast as possible. Okay, the shorts do that. Shorts move me towards my target faster than longs do. This allows me to move my stop to break even faster. It reduces stress and enhances my thinking abilities so that I can manage a trade better. It just gets the whole trade over with much more quickly. Everything is faster. It's just more efficient, I guess you could say. So the next part of the strategy is to trade against the 30-minute EMA. I already talked about how violent the reaction is to the 30-minute 8 EMA as compared to a lot of the other EMAs that I've been watching. So the strategy means that I'm only going to trade the 38, not the 5, not the 15, not the 1 hour. I don't want to be the jack of all trades and the master of none. I want to be the master of this trade, and it's the 38 EMA. Only that one only. So this works pretty well with indices, I noticed. So you can use it with the US 100, the US 30, Dow 30, S&P 500. It works well with all those. They all tend to react to it. I've also noticed that stocks also tend to react to it pretty well. So the advantage of the indices is that on Forex you can trade them, all the time, all night. London session, Asian session, all those different sessions. So there's more opportunities available. So the idea basically is you find an asset that's already trending down. It's got to be very weak. Eventually it'll stabilize and it'll start trading sideways, and it'll end up reacting to the 38. Okay, so what you want to wait for, though, is you want to wait for price to form a relationship to the 38, meaning it needs to begin to interact with it such that you can see a reversal pattern forming. Okay, it needs to be putting in a topping pattern like a Christmas tree or a double top or a head and shoulders, something like that. As price is putting in its topping pattern, you are keeping your eyes peeled on the RSI chart. And this is a really important part of the strategy. Relative strength indicator shows me how likely an asset is to fall based on the indicator on that chart. I'm only going to go short once the RSI is reading under 45. Okay, and I've marked that on this RSI chart. I put these numbers in 45, 50, and 55. I'm only going to go short once this number is under 45. I'll expect a back test of some kind. So unless it's the open, I probably won't go short the moment the price drops or the indicator drops under 45. I'll want to see some kind of back test. I'm going to keep an eye on how price is reacting and responding to the 5 also. The 5 is here in green. Okay. It is likely, it's like a secondary resistance level before the drop. So as you can see in this case, I traded this one this morning. I saw that it was downtrending. I actually turned my machine on right here this morning, And I was like, oh man, that is a setup right there. But I wasn't organized yet enough to trade, so I had to skip it. Unfortunately, it's always better if you can catch the first one, okay, after a breakdown. And I was lucky enough to catch the second one, but I think it's higher risk. The first one I think is the lowest risk one to take, just because it's the first time it's reacting to the level. Okay, so basically, once you have all these elements in play, you've got a downtrending stock, you've got a reversal back up to the line, you've got a pattern that forms against the line, and then you've got your your indicator dropping under 45. Then you're good to go. So in this case, um, you had and I'm going to put this on a little bit faster chart so you can see this a little bit more clearly. Basically, what you had was a head and shoulders pattern that formed against the line here. Then you had a back test area here, and this is the back test, and then it's reacting and responding to the 5 at this point, and then it went. So basically, that was the first trade. I only turned my machine on right around here, and it was just too late. So then it's the US 100, right? Let me just double check something here. Yeah, let's see. The first one, I traded the 30, actually. My first trade of the day was on the 30. So I'm going to put this back on the 5 because it's just easier to see everything forming, and then you can kind of zoom in after. So it also, at the same time I turned the machine on this morning, formed a pattern against the 30 here. But again, I was too late for that one. This is the one that I traded first. So I got into it. I noticed, let's see, we definitely on the 30 here, yeah? Yeah, okay. I noticed this Christmas tree forming. That formed okay. And then I saw this big violent push down. I'm like, okay, let me wait for a back test. So if you want to zoom in a little bit, you can see this was that big violent move down right here. And then here was the back test. So I think I got in on this back test here, and at first it was going my way, and then it kind of like came up about halfway to my stop, and I was kind of panicking a little bit, but I didn't get out, and then it kind of came down here and started to go my way a little bit, and for some reason I moved my stop to break even when it was down here, and my entry was like right here. Oh man, it was so close. It was so close. My entry was right there. Price came back up, took me out break even. So basically, I moved my stop to break even too early, way too early, because you can see what happened next. It just zoomed down towards target. So that was very sad for me because, it's like, wow, it was that close, But, that's the way it goes. Some you win some, you don't win some. At least I didn't lose. So anyway, I figured, well, let me look at another index and see if one of the other ones is working. So I went over to the US 100 and see what was going on over there. And this was right after that. So I was like, oh yeah, okay, it's actually interacting with it as well. And as you can see, this one was putting in more of a head and shoulders pattern, right? So that's also very valid. And it was downtrending. It had interacted with it once already and gone further down, and then it came back. This made it a little bit higher risk at coming up fast like that, but it was still valid because it was interacting with the line. So you could see, if you look down here, again, I'm watching RSI a lot. So if you look at RSI, you can see a little bit of a head and shoulders pattern forming there. And then I kind of zoomed in at this point to see what would happen because it took this big violent push down. I'm like, okay, look for a back test. And the 5 is often, like I said, the secondary level that'll back test against before it finishes going down. So that was a big violent move down here, right here. Then it came up and back tested the 5. And right when it back tested the 5, I said, this is my chance. So I went ahead and got short right there. Short position right there. And with a stop, I think up here somewhere above the line. And basically held it down for a $2,500 profit. I think I got out down here where I saw this kind of conglomeration here of of resistance. I think I got out right about there. So that was my trade. And I took, let's see, I took the US 100 cash 200 lot, 448 to 435. So a 13 pip move down, 48 right here, 35 down here. Oh, 35. Actually, I got a right there. Okay, I got it right there. I got it kind of early actually. Could have made a lot more off that one. But anyway, that was a trade. I took about 80% of an R. I think I was trading a 3K R unit, and I got about 2,500. It was kind of like going sideways here for a little while, so I just said, yeah, let me just go ahead and get out. So anyway, that was basically it. That's how the strategy works. Really important to make sure that RSI is down under 45 when you trade this. So when I took this this back test, you could see price came all the way back up right here. I'm going to zoom in a little bit on this so you can see a little bit better. Right there, price came up, tapped into that 8. There it is on the 1. Here it is on the 5. That's where I went short. That was the back test after the big push down, after the pattern. RSI was under 45 the whole time. That was happening. You can see it never came back above 45. That's really important. And then it went down, and it went down to this. I put this pivot line in, this gold pivot line, because of a swing low down here. Okay, that I found. Okay, right there. So I figured that would be the rock bottom for this move, and basically it did hit that to the penny pretty much, and bounced off of it, and then came back down again a little bit under it, and bounced really hard again at the open. Okay, all right, that's basically it. I'll see you on the next one.